Dear students, hope you all are fine. Today I'm going to make one more video on company final account for you. But before that, please make it sure that you have watched my earlier videos, especially the lesson 2, where I have explained the format of company balance sheet. Please watch that first if you have not watched till now, and after that watch today's video. And after this also I'm going to share a lot of more videos on company balance sheet. And today let us take one problem from the book only. Let us pick up one question here. See, there's a question of final account, company balance sheet. You have to make company balance sheet. Let me read the question in 1 minute. From the following balance sheet of Northeastern Region Limited as on 31st March 2021, prepare a balance sheet as per Companies Act 2013, Schedule 3. So this is a question, and the items are, let me just tell you the items: 8% debentures, preferential capital, finished goods, fixed assets, stock, debtors, equity share capital, general reserve, then security premium, provision for taxation, output CGST, output SGST, input CGST, input SGST, investments, loose tools, then some more items such as cash balance, trade creditors, term loans. So this question came in Guwahati University, become major in 2017, and that question let me take today for you to explain how you shall make the balance sheet of this company. And before that, I have to give you some idea about GST, Goods and Service Tax. It was, all of you know, it was introduced in India on 1st of July 2017. And there are, see, very specifically, briefly I'm telling, you know, the GST, two types GST, like CGST and SGST. CGST means Central GST, and SGST means State GST. Anyway, the details you'll be getting some other class on GST. But what is the difference between input GST and output GST? Please learn that from your book also, from anywhere you're finding input GST. See, when you purchase some goods as a businessman, when you purchase some goods or purchase anything, then we pay some GST, Goods and Services Tax, that is input GST. And then when you sell out these goods to our customers, we collect GST from them, and that is output GST. So what you have to do, suppose you have already paid 1,000 rupees as GST, your input GST, and you have collected from your customer rupees 1,500 GST, then you have to pay 500 to the government. So what you have to do, from output GST, you have to deduct input GST, and balance you have to pay to the government. This is also known as input tax credit. The details we'll be discussing in some other video. But for the time being, just remember, you have to deduct input GST from output GST. Because input GST you have already paid to the government when purchasing the goods, whatever maybe you have purchased, and services. And output GST, what you collect from your customers. So you have to deduct input GST from output GST, and the difference you have to pay to the government. Now that is one point, special item, so I have taken it first. And now what I advise, I'll be giving you a PDF also of this question. So what I advise on company balance sheet, regarding company balance sheet, dear students, first of all, you make the format like this. You first make the format, first make the blank format, because you have to learn the format, there is no doubt about it. I've given you the techniques of how to prepare the format of company balance sheet, which is as per latest amendments, latest circulars and notification by the Ministry of Corporate Affairs. So with that help, or from any book, you can take the balance sheet format, the latest balance sheet format. You will find in my earlier video, the lesson 2, I've given format PDF of company balance sheet, and I have also explained how company balance sheet is to be prepared. So this way, I advise you to make the balance sheet format first. You make the blank format, forget about these figures, make the blank format first. Okay, and after that, you go below this format. and there will be notes to account. You know, notes to account are very important segments of financial statements. So that notes to account, we shall be doing all calculations below, and this calculation, these notes will be having some numbers, note number 1, 2, 3, 4, like that, and that number will be correspondingly coming here. Suppose share capital, you have done working here, share capital, say is a note number 1. So you shall be writing share capital here. It is already written in the format. Then you give number 1 and write the figure. The net figure will be coming here. Now, dear students, this is a system which is followed in final accounts, that you have to make the notes below, and the note number will be coming to the main format along with the net figure. So balance sheet becomes a very concise one, and all other details coming in the notes below. So from that note we'll be doing it. Now one by one note we'll be doing, but before that I advise that you write the format first. Full format you can write whatever is given in the act, whatever is given and whatever I've shared with you. Write the format without the figures, without the note numbers, and then go below one by one the notes to account. So see here, note number 1. You remember what are the headings? I'm just reminding you in the format what are the headings. First it is equity and liabilities, and after equity liabilities we get shareholders fund. Under shareholders fund there are share capital, reserves and surplus. All these things are there. So today let me first take share capital. Let me first take in the working share capital. I'm doing it in the working. Okay, I'm doing it the working share capital based on the question. So share capital, you give notes to account below the format, notes to account. You give share capital, and below share capital you write authorized capital. Okay, if there is any authorized capital given in the question, you write that so many shares of so much each, like that. If nothing is there, give a dash. So authorized is over, it will not be totaled with the other figures. You give double line if there is a figure and finish it off. And then you write issued capital. Similarly, in the question there may be given issued capital. It will not be given in the trial balance side, it will be given below additional information, and whatever is given in the question, you take issued capital, say so many shares of so much rupees each per share, like that it will be written, and you take that and write issued capital and find the figure and give here double line, and don't push it to the addition below with the other figures. But in this question, dear students, there is no issued capital, so I have just written issued capital and I have not put any figure here. So issued capital is gone, and then you take subscribed capital. Okay, yes, subscribed capital have to be there. Subscribed capital means how many shares have been purchased by the shareholders, and that much money you have received, and that subscribed capital will be coming here. As per this question, subscribed capital is given here. Preference shares 4 lakh. They have not given any number of shares or price of each share. They are just given preference shares 4 lakh. So I'll write this here dot preference shares of rupees each. Yes, it is fully paid. So I'll write fully paid also. There's no calls in arrears. So preference shares 4 lakh. If there's calls in arrears in the question, you have to deduct the calls in arrears. Now in this question, preference shares are given 4 lakh and equity shares are given 11,68,200. I have taken these two here and then I'll total it, and nothing else is in share capital. And this total is coming 15,68,200 is coming share capital. Now the students come to the format, and in the format you have already written in the format share capital. So note number 1, 15,68,200. So share capital is over. This point is over. Then you shall search the next item. According to format, we'll be searching the items in the question. So in the format, you know, there is next is reserves and surplus. So you put here reserves and surplus. There are two options. One, see, this main headings you have to always write. There's no doubt about it. But sub headings, sometimes it is missed out also. But I prefer writing all headings. Say under shareholders fund, you write share capital, then reserves and surplus, then like share warrant and application. I write everything, and then I search the question, and whatever is there accordingly I put here. Now in this question there is reserves and surplus. So go to working again, you go working, you write working note number 2, reserves and surplus. Let us find out in the question what is given according to reserves and surplus. Yes, in the question there is security premium. See, you write security premium here. Security premium will be coming here. You know, all reserves come here. Security premium will be coming here. But earlier, you know, they used to write security premium reserve. Please don't write reserve. The word reserve should not be used here. I explained in the earlier video. And after security premium, we are having in this question general reserve. So I have taken general reserve here. A security premium general reserve, both you have total here, and I am getting here 27,25,000. So here security reserves and surplus is already written here. So I am writing here working number 2 and the figure here in the current table. See, I have kept previous year figure blank because these figures are not given in the question. If these figures are also given in the question, then in the working we do 2 columns, current year and previous year, and we shall put 2 sets of figures here. But here previous year figures are not given, so forget it. So in the first column I have given reserves and surplus 27,25,000. And then we are having the next item we are having, see here, many items are there, but I am taking the relevant items which are relevant to this particular question. So next item is non-current liabilities. So below non-current liabilities, we are having long-term borrowings. So I am giving working number 3 here below. Working number 3, note number 3, long-term borrowings. And let us find what are there in the long-term borrowings. As per this question, dear students, long-term borrowings is debenture, 8% debenture is long-term borrowing, you know, long-term borrowing and term loans. These two are only given in the question. So debenture and term loan, 8 lakh and 11 lakh 45,000 is coming to 19 lakh 45,000 total. So this total you bring it the main format here. Non-current liabilities, long-term borrowings. Note number 3, 19 lakh 45,000 is coming. The next figure here is coming long-term borrowings. So this is over, and next you go to the next item. Yes, next item in this part is current liabilities. See, under current liabilities, you know what are the items, but in this question it's very simple because all details are not given here. So only very few figures are given. So number 4, the first item is coming a trade payable. It's current liability, trade payable, and below trade payable, see, lot of things that they are actually in actual companies, but here it is only trade creditors. So below trade payable, I have taken trade creditors and nothing else. And this amount is 11 lakh. So it is working number 4. So I am putting a trade creditor note number 4, and the figure is 11 lakh. I am putting it in this column 11 lakh. So this is also done. So under current liabilities, I have completed trade creditors. Under current liability, next item is other current liabilities. So in other current liabilities, you make a note like this. Note number, it is 5. It is 5, you write other current liabilities, and other current liabilities you write that GST you have collected some amount and already paid something, the difference you have to pay now. So input GST means which you have already paid while purchasing the goods or services, and output GST which you have collected from your customers. So output GST you write first. So, and there are 2 types of GSTs given here. 2 types of GSTs are given here. Write specifically first output CGST 60,000 and less input CGST therefrom. It is 40,000. So you are writing output CGST 60,000 less input CGST 40,000. So next 20,000 you have to pay to the government, and this is our other current liability. Similarly, output SGST means state GST. Output state GST 60,000 and input state GST again 40,000. So you have collected 60,000 from your customer as SGST, and you have already to your credit, input tax credit, input GST was 40,000. So the balance you have to pay to the government now. You understand that? 60,000 minus 40,000, 20,000 you have to pay to the government. So this 20,000 is coming as your other current liabilities. So regarding GST only, there is other current liabilities. 2 figures are given there. So one is 20,000 CGST net and SGST 20,000. So this is totaling coming here 40,000, dear students. Now this, after doing this, you come to the balance sheet format and you write here below current liabilities. Next one is other current liabilities. You write here note number 5. Note number 5. Number as it comes. Don't worry about numbers. It may be 5, it may be 6, whatever may be. What is the note number? It's not permanent one. It depends on the question and how you solve it. So that number here is coming. Trade payable was 4 and other current liabilities 5. So you write other current liabilities and note number 5 and write here 40,000. This 40,000 is other current liability in connection with GST, which you have to pay to the government. And now, and one more item is there under current liabilities. One more item is here, that is short-term provisions. In short-term provisions, say there are certain provision for taxation like that. You provide some money you keep for certain expenses. Say for tax, you have kept some money. For income tax, you have kept some money from your, reserve some money from your profit. So that is coming under short-term provisions, because you have taken some profit and kept it, and very soon you will be paying it to the income tax department. So it is not a long-term provision, it's a very short-term provision. So the working number 6, note number 6 is coming short-term provisions. Remember, these notes are not fixed, numbers are not fixed. It may be 6, 7, 5, I don't know. It depends on the particular questions as far you go on with the workings. So here it's coming 6 short-term provisions. Under that, provision for taxation. Only one item is given in the question, dear students. Only one item is given, is 2 lakh. So that is also done. So come here in the question, short-term provisions, it is 2 lakh. Means under every heading there are some details you have given here. And this makes your equity and liability side over. Equity liability side over, and the total is coming here 73,38,200. Now let us go to the asset side. Asset. So you write the asset, and below asset, first will be non-current asset, and below non-current asset, earlier it was fixed asset. I told you that now you cannot write fixed asset, you have to write property, plant and equipment. And below property, plant and equipment, there are the items will be coming, like first item is tangible asset and next is intangible asset, if there is given in the question. I'll take a separate video to explain intangible assets and all. So here under non-current asset, you write property, plant and equipment, and then it is given in the question straight away 41 lakh. So I have written here property, plant and equipment 41 lakh. So you put here, it's all tangible, nothing is mentioned about intangible. So you write here next working number, serial working number, you write here 41 lakh property, plant and equipment. In the question is given fixed assets, but I'll not write fixed asset, I'll write property, plant and equipment. And tangible is not mentioned, but even intangible is not mentioned here. It is it is written tangible. Okay, fine. Tangible, fine. The non-current investment will be coming there. Non-current investment. Next working you go, non-current investment means long-term investment. And in the question, investment is given 5,55,200. So you write here long-term investment or non-current investment is coming 5,55,200, and you bring it here again in the main format. Main format is a non-current investment, and give the schedule number, give the figure here. And this is over for this proper non-current asset. Then current asset. Below will be current asset. See what are given in the current asset. Current asset number 1 is inventories. So inventories, you know, inventories are also known as stock. There are different types of inventories. You find out from the question. It may be in the form of finished goods. It may be from stock. It may be in the form of loose tools. All these things are coming under inventories. So all these 3 things are given in this question. So inventories you write here. Finished goods, I have taken 10,08,000 finished goods. Then stock 4,50,000 I have taken here, and loose tools 1,75,000. This total will be 16,33,000. So come to the main balance sheet. You write here Inventories, under current asset, you write inventories, and note number you give 16,33,000. And then next item is trade receivables. Under trade receivables, only sundry debtors is given here. So you write here sundry debtors and nothing else is given here. Bill receivable is not given here. So sundry trade receivables is 10 lakh is given directly. So you write a 10 trade receivables, working note serial number and 10 lakh. And then cash and cash equivalents. Cash and cash equivalent, this is a heading. I'll take a separate video to explain what is cash and cash equivalent. But for this question is only one item is given here, cash balance. So below cash and cash equivalent, you write cash balance and no other item is given here. There could have been some more items, but in this question only one item. So you take this total only single item and you write here cash and cash equivalent is 2,50,000. Give the respective note number. And then other current assets. Other current assets they have given here, but there is no heading as per format they have written here. But there is no other item, and now total this side to asset side is 75,38,200. So asset side, liability side, both totals are equal now. So this way, dear students, you have to make the balance sheet. You have to make the company balance sheet as per Schedule 3 of Companies Act 2013 as amended by latest notifications, which I have already given you. But please make sure that you have watched my lesson 2 video, because that deals with the format of company balance sheet. And now I have given a practical question on company balance sheet, but I'll be taking up more such practical questions, and there may be some explanation regarding the different items of balance sheet which students feel difficult. So I'll be taking up one by one. So till then, please practice this. I'll be sharing with you PDF also. Thank you very much.